Here in Western Australia's Pilbara region, the $124 billion a year iron ore sector is nearing a crossroads. And these roads lead all the way to China. But the urbanisation of the world's second largest economy, which saw demand from Beijing for our prized red dirt overtake our first major customer, Japan, 20 years ago, is nearing its peak.
It still will remain a very large market for us. Other markets, Asia and India, as examples, will continue to grow quite rapidly.
Which is expected to test the world's biggest iron ore producer.
As we look forward in the next 20 years, we'll use as much iron ore as we've used, say, in the last 30 years, and the scale of projects that are needed to sustain that is simply enormous.
Rio Tinto's newest site, Gudai-Darri, opened in 2022. A year into the life of this mine, 43 million tonnes of iron ore have been dug out of the ground behind me, just part of the 335 million Rio Tinto hopes to export this year. If that's achieved, it'll be the second biggest year in the miner's history. Rio says it needs to start a new mine every year until the end of this decade to meet demand from both China and other markets. But analysts say that's not the only reason it needs to increase capacity.
Rio Tinto talks to having 130 million tonnes of new mine supply coming into the system by 2028. To that year, they have 90 million tonnes of depletion. That's a huge amount of lost production they need to replace.
With some of the Pilbara's original iron ore mines well into their fifth decade, it's not just Rio Tinto's reserves that are expected to start running down.
Depletion of production from existing mines is becoming an increasingly significant issue for the mining companies to deal with.
The region's second largest iron ore exporter, BHP, has plans to step up its output from its current 253 million tonnes a year, but not by building new mines.
We are seeking to grow through productivity and potentially some further debottlenecking capital to get us up to that.
It also doesn't see India as the major customer Rio Tinto predicts it'll be.
They're likely to meet that through indigenous or domestic resources of high-quality iron ore.
BHP is instead directing capital into other commodities it says are part of the new megatrends of mining.
That's really potash, copper and nickel.
It's clear our two biggest iron ore miners are looking to the future quite differently. The third player in this market has a different vision yet again. Its future has a greener tinge to it.
We're very positive in the way that China is reinventing itself to also take advantage of a green iron ore, green steel future.
Fortescue is still very focused on a future in China, but as it continues with its push to become a green iron ore supplier, it's also looking beyond Australian shores.
We've started an exciting venture with the government of Gabon to develop and liberate one of the last large Tier 1 high-grade iron deposits on the planet.
As the new supply and demand picture for Australian iron ore evolves, one thing's for sure. As the single biggest sector propping up our economy, Australia's financial stability rests on what happens next.